Good morning, you're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. The Bangko Sentral has kept policy rates steady at record lows, but it warned of higher inflation for this year. The overnight reverse repurchase rate was unchanged at an all-time low of 2% for the third consecutive meeting. Overnight lending was likewise maintained at 2.5%, and deposit was unchanged at 1.5%. BSP Governor Ben Diokno said the Monetary Board is of the view that the prevailing monetary policy settings remain appropriate to support the national government's efforts to facilitate the economy's recovery from a pandemic-induced downturn. Diokno said the BSP is prepared to take immediate measures as appropriate to ensure that the monetary policy will continue to support the central bank's price and financial stability objectives. However, Diokno warned that inflation may breach the upper end of the target range of 2 to 4% in 2021 due to supply-side constraints on food prices such as meat and an uptick in oil prices. The Monetary Board has raised its full-year inflation forecast to 4.2% from the original target of 4%. Okay, guys, kicking off the markets report with a look at the virus cases worldwide and just the overall vaccine story. You can see on my Bloomberg terminal here, COVID-19 cases have now passed 125.2 million. Deaths have exceeded 2.7 million people already. But at least, on the upside here, more than half a billion COVID-19 vaccine doses have been administered worldwide. That's around 500 million shots globally. Another thing is that this happens to be going pretty well over in the U.S. According to the Bloomberg Vaccine Tracker, U.S. President Joe Biden set a goal of administering 200 million doses by the end of April. That is double his target for the first 100 days in office. But on the downside, India seems to be curbing their vaccine exports. This is a move that analysts are saying is likely to hurt the disadvantaged nations the hardest. Reuters has cited several sources on this story. They have said that this decision was made amid rising cases over in India, and recently they have also included the vaccination program in India to include everyone above 45 years old from April 1st. Now, their government has not yet publicly announced a ban there, but Reuters sources have said that there will now be phased exportation. In any case, analysts are now saying that the WHO says COVAX goal, their original goal was to inoculate 2 billion people this year, and that might be missed due to this so-called vaccine nationalism. So we still need to get the exact figures on how this will affect us here in the Philippines, specifically because the Serum Institute of India manufactures AstraZeneca vaccines as well as Novavax. So we will be updating on this developing story accordingly. Now, quick check on our markets and how we are opening this Friday morning. You can see a bit of a pullback to 6571.38. That's down 0.15%. This comes as we also saw here in the Philippines, record high cases again yesterday. 8,773 new cases of COVID-19 yesterday. Of course, the trading floor remains shut. Courts are now shut down, and Okta is saying that the ICU is at a critical level, even as the reproduction rate has now slowed to 1.91. Now, of course, our opening here follows a third straight day of a rally. Yesterday, we were up by 1.3%, and this according to analyst Justin Trembevilla. Sentiment remains cautious, but there is some bargain hunting going on. So we'll have more on markets later on in the broadcast. We've got with us COL Financial's April Lee Tan joining us later on. Meanwhile, here are the other headlines we're keeping our eyes on. Despite the pandemic, BOI-approved projects jumped 65% in the first quarter of the year. Investments approved by the board reached 137 billion pesos from January to March, from only 83 billion pesos in the same period of last year. BOI Chairman and Trade Secretary Mon Lopez said the approved investments would create 12,000 more jobs. That's 13% higher than those generated a year ago. Now, last year, the total BOI-approved investments barely exceeded 1 trillion pesos. That's down 11% from the 1.14 trillion peso all-time high in 2019. Now, for this year, the board aims to approve 1.25 trillion pesos worth of investments with the help of the proposed Create Bill, which would reduce corporate income taxes to 25% from the current 30%. NEDA is keeping its economic growth target at 6.5% for 2021. That's despite renewed mobility restrictions due to the ongoing surge in the COVID infections. Acting NEDA Secretary Carl Kendrick Chua said, "We simply have to continue risk and fund management to help those affected." Chua also emphasized the need to streamline the government's vaccination program. On the other hand, the S&P Global Ratings downgraded its Philippine growth forecast to 7.9% from 9.6%. That is on the back of the upward spike in inflation weighing on consumption. The country's growth forecast for 2022 was likewise trimmed to 7.2% from 7.6% previously. But the Global Debt Watcher's projection is still higher than the government's growth target for the year. S&P's growth forecast for the Philippines also remains the second highest in the ASEAN next to Vietnam. And the country's top 1,000 corporations saw their combined 2019 gross revenues grow at its slowest pace since 2015. The gross revenue of the top firms amounted to 12.3 trillion pesos in 2019, which is 4.7% more than the amount recorded in the previous year. While their combined net income amounted to 1.45 trillion pesos, that's 5.8% lower than the amount in 2018. Petron grabbed the top spot on the list with a gross revenue of over 323 billion pesos, but this is still 10.5% lower compared to its earnings in 2018. Recall that the country's GDP grew at a revised rate of 6% in 2019, which was the slowest ever recorded since 2011. COVID-19 cases reaching another record and investors scrambling to make sense of how to trade. Here to chat with us about her current outlook on the equity space, we have with us April Litan, Vice President and Head of Research at COL Financial. Good morning, April. Welcome back. April, I think you must unmute your mic so we can hear you.
Yeah. Good morning.
There you
Good morning, Danie. Good morning to your viewers.
Happy to have you with us, April, amid, of course, the rising infections again and some woes on the vaccine front. Give us a feel of how the trading sentiment is going to be for the next few days. We had already seen quite a recovery in the past 3 days, but it seems to be that recovery might be short-lived. Tell us your short-term outlook.
Yeah. I just hope, though, the rally that took place will continue. The good news is that we've broken above the 6,400 support on a more convincing manner. So the next level would be 6,600. And last night in the US, I think the Philippine ETF performed quite well. So we may see a rally. It would be interesting to see whether the investors would be focusing on the new record high in terms of infections or the valuations of stocks, which are right now actually very attractive for a lot of issues. So I think that's what's happening right now.
April, these levels, so you did mention, we're staying above the 6,400 level. We broke through it briefly, but now we're back above. Is this connected in any way to the fundamentals? Because the valuation is still much higher than what we saw last year. We were hitting 4,000 levels when the cases were not nearly as high as what we're seeing right now.
I think the main difference is, during that point in time, there was much uncertainty, even though, the execution of the vaccination process is much less to be desired. The fact is today we really do have a vaccine that is working, and you see countries that have vaccinated actually seeing their infections going down and slowly reopening. So to a certain extent, although the numbers are up, you do see a light at the end of the tunnel. And even the companies in 2020, they didn't know what to do. But now, there's been the coping mechanism. A lot of companies have digitized, and I think it's more of execution now, like how you could vaccinate faster more people faster, how you're going to procure the vaccines. But you know that there is light at the end of the tunnel. The question is, how fast are you going to get there? Unlike
Mhm.
last year, we didn't know much.
April, the BSP held fire yesterday. That was likely, quite expected by everybody. But at the same time, with inflation seeming to be or looming at least much higher than the target and higher than analysts have expected, and the supply chain issues or supply side issues rather might be holding up. I mean, how much more help can the BSP do at this point, especially since there does not seem to be more help from the fiscal side in the near term?
Well, I think as long as they maintain their policy rate, that's okay. They can still cut the triple R's for the banks, and that would boost liquidity. But at this point, there is still a lot of ample liquidity. The banks are just a bit cautious on the lending side. So I think, we just have to wait for consumer confidence and business confidence to pick up. So I think the heavy lifting has to come on the fiscal side. But on the positive side, looks like the create law will soon be, passed into law. And that should help boost earnings of corporates and help us encourage um, more investors to come in, more investments to come in, and hopefully that should help us exit this pandemic-induced recession faster.
April, how bullish are you on the banks and property space staging a recovery, given that the governor has already said that, they might not be easing, at least for now, they're going to be staying put. And as you mentioned, banks are still very risk averse right now. We're not really seeing this liquidity being mopped up into the property space, at least.
Yeah, we are quite bullish. That's because last year the banks had set aside a lot of provisions, and that's the reason why their earnings were down sharply. So it just means that given the NPLs that are expected to materialize this year, they do have a lot of provisions. So that means that they won't be hurting the capital positions of the banks. They're going to be strong. And when you talk to the banks right now, they're gonna say, "Well, we were bracing for something much worse, which is why we set aside so much provisions last
Hmm.
year." But
Okay.
it seems as if it's not as bad as we thought it would be. So this year, they're expected to set aside less provisions. So definitely, that's good news for us. You just need to boost confidence and for businesses to reopen, and things will be much better. If you look at what's happening in other countries, the recovery is actually quite good, quite fast. And even if you say travel, for example, in the US, they said that the airlines are actually doing very well already, which is quite surprising. So maybe if the key is really controlling the number of infections and vaccinating more people faster, and if we do that properly, then that would allow the economy to recover much faster.
Okay, April, and final question on still on the property space. You've got a couple of REITs here, and this has been on focus. But it does seem that some analysts have said that the DDMP REIT is quote lackluster. It's still hovering at the IPO levels. Now you've got Philinvest filing officially with the SEC their maiden REIT. Tell us, what's the sentiment now? Is this the wrong time to be having these sort of maiden offerings, given this tepid investor environment?
Yeah, I don't think it's so much because it was a bad issue. It was just expensive because they IPO'd with an implied dividend yield of around 5.1% for this year, which is in some ways comparable to a REIT. And compared to a REIT, for example, a REIT has more assets, more diversified locations with PESA accreditations, which of course would be superior to the assets of BDMP REIT. So in that respect, of course, investors will compare and they'll say, well, maybe I'd rather just buy a REIT rather than DDMP REIT. So I think that's one of the main issues. Now, for the other REITs that are coming along, of course, it
Mhm.
depends on what the valuation would be, what kind of yields they provide, and if they are in the office space, as long as those assets are attractive, they have BPO tenants, they have PESA accreditations, I think there will be a good demand for them because, of course, the earnings will be more resilient.
Okay, so stable earnings need to be in focus here for the upcoming issuances. But as April mentioned, quite look at the price and whether that is attractive compared to other issues in the market. Thank you so much for those insights, April Litan of COL Financial.
Thank you.
And that's a first look into the business day. Today is March 26, 2021. Catch Business World live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.